Running a business comes with a variety of costs, but as an LLC owner, you can significantly reduce your taxable income by deducting eligible business expenses. We've gone over businesses to start on this channel, but never what to do when you already have one. Let's talk about that today. By understanding the rules surrounding tax deductions, you'll not only save money, but also streamline your financial planning. This guide will walk you through the basics of writing off expenses, common deductible items, and tips for maintaining accurate records. What does it mean to write off expenses? A write-off, or tax deduction, allows you to subtract the cost of certain business-related expenses from your taxable income. For example, if your LLC earns $100,000 in revenue and you have $20,000 in deductible expenses, you will only pay taxes on $80,000. The importance of record-keeping proper documentation is essential when writing off expenses. Receipts, invoices, and clear financial records ensure that your deductions comply with IRS rules and protect you in case of an audit. Step 1. Understand eligibility for write-offs. Not every expense qualifies as a deduction. To be eligible, an expense must be 1. Ordinary, a common and accepted expense in your industry. 2. Necessary, helpful and appropriate for running your business. LLC-specific considerations, LLCs, have the flexibility to be taxed as sole proprietorships, partnerships, or corporations. Your tax classification affects how deductions are claimed. Most deductions mentioned here apply universally, regardless of how your LLC is taxed. Step 2. Common LLC write-offs. Let's break down some of the most common expenses small business owners write off, with practical examples for each. 1. Office space and utilities. Renting office space. If your LLC rents office space, the cost of rent is fully deductible. This includes co-working spaces or traditional office leases. Example: 1. Monthly office rent, $2,000. 2. Annual deduction, $24,000. Home office deduction. If you work from home, you can deduct a portion of your home expenses. To qualify: 1. The space must be used exclusively for business. 2. It must be your primary place of business. How it works: you can deduct a percentage of your home expenses, mortgage, rent, utilities, insurance, based on the proportion of your home used for your office. Example: 1. Total square footage of home, 1,500 SQ. 1. 2. Office space, 150 SQ. 2. FTR, 10% of your home. 3. Annual utilities, $6,000. 4. Deduction, $600, 10% of utilities. 2. Vehicles and mileage. If you use your personal or business-owned vehicle for work, you can deduct vehicle-related expenses. Mileage deduction. The IRS offers a standard mileage rate for business travel, updated annually. Example: 1. 5,000 miles driven for business in 2024. 2. IRS mileage rate, 66 cents per mile. 3. Deduction, $3, 300 actual expenses. Method: alternatively, you can deduct actual costs, such as 1. Fuel. 2. Repairs and maintenance. 3. Insurance. 4. Depreciation. Pro tip: choose the method, mileage versus actual expenses, that provides the greater deduction. 3. Office supplies and equipment. Office-related purchases are typically fully deductible in the year they are purchased. Examples of deductible items: 1. Computers, printers, and phones. 2. Furniture like desks and chairs. 3. General supplies, pens, paper, staplers. Example: 1. New laptop purchased for $1,500, fully deductible as a business expense. 4. Marketing and advertising. Money spent to promote your business is deductible. Examples include: 1. Website hosting and design. 2. Social media advertising. 3. Business cards and flyers. Example: 1. Google Ads campaign, $2,000. 2. Print advertising, $500. 3. Total deduction, $2,500. 5. Professional services fees paid to professionals like accountants, lawyers, or consultants are deductible. Example: 1. Accountant for tax preparation, $800. 2. Attorney for contract review, $1,200. 3. Total deduction, $2,000. 6. Travel expenses. When traveling for business, many costs are deductible, including: 1. Flights. 2. Hotels. 3. Meals, 50% deductible. 4. Transportation, for example, taxis, rental cars. Example: 1. Round-trip flight, $500. 2. Hotel for 3 nights, $600. 3. Meals, $150, 50% deductible equal, sign $75. 4. Total deduction, $1,175. 7. Employee wages and benefits. If your LLC has employees, their wages and benefits are deductible. Examples of deductible costs. 1. Salaries and bonuses. 2. Health insurance premiums. 3. Retirement contributions. Example. 1. Employee salary, $50,000. 2. Employer-paid health insurance, $5,000. 3. Total deduction, $55,000. 8. Education and training courses, certifications, and conferences that improve your business skills are deductible. Example. 1. Online marketing course, $500. 2. Conference registration, $300. 3. Total deduction, $800. 9. Interest on business loans. Interest paid on loans used for business purposes is deductible. Example. 1. Business loan interest, $2,500 annually. 2. Deduction, $2,500. 10. Insurance premiums. Business-related insurance policies are fully deductible. Examples. 1. General liability insurance. 2. Professional liability insurance. 3. Business property insurance. Example. 1. Annual business insurance premiums, $1,200. Step 3. Track your expenses. Use accounting software programs like QuickBooks, FreshBooks, or Wave Simplify expense tracking and help categorize write-offs. Separate business and personal finances. Open a dedicated business bank account and credit card to avoid mixing personal and business expenses. Step 4. Understand depreciation. Some high-cost items like vehicles or machinery may need to be depreciated over several years instead of deducted in a single year. The IRS provides guidelines on how to calculate depreciation. Example. 1. New office equipment, $5,000. 2. Depreciated over 5 years, $1,000 annual deduction. Step 5. Stay compliant with IRS rules. Keep thorough documentation. Save receipts, invoices, and bank statements for at least 3 years. Know what's not deductible. 1. Personal expenses, for example, vacations, personal car use unrelated to business. 2. Fines or penalties. 3. Political contributions. Consult a tax professional. An accountant can help ensure that you maximize deductions while staying compliant. Writing off expenses is one of the most powerful tools for LLC owners to reduce their taxable income and save money. By understanding which expenses qualify, keeping meticulous records, and leveraging available deductions, you can make the most of your business's finances. Whether it's deducting the cost of a home office, saving on vehicle expenses, or writing off professional services, these strategies will help you keep more money in your pocket while running your LLC efficiently. Start identifying your eligible deductions today and take control of your financial future.